Hi, Heather. How are you?
I'm good. How are you?
Great. Oh my God, I can't believe I just went blank. You got married. What is your last name?
Well, it's Heather Jackson, even though I haven't updated my like Zoom profile or anything.
Oh, and you've done business now with your new name, or is it still under your?
It's Heather Hunter Jackson because we still haven't had the copy of the marriage license thing come through yet. So, yeah.
Perfect. Want to make sure people out there, they know you're from the old, new,
Yep.
or whichever. I want
Yeah,
to
go with Hunter.
Okay, perfect. I want to thank you for taking the time out to speak with me regarding lending, because as we know, the market is totally crazy out there right now.
Right.
And Heather, give us a little bit about you. Tell us who.
Okay. All right. So I have been in the lending business for it'll be 20 years in November. Have always been on the loan side of the business, even though, yes, I have my broker's license. But that's because way back in the day when we started to do loans, you had to have a Department of Real Estate license.
Oh, wow.
I know. And so I used to be with spent a lot of my career just at a mortgage bank, who was also a mortgage broker. We had both options, and recently I have become just 100% mortgage broker. Which do you want me to give you a little detail on that?
Please do.
Okay. Yeah. So you have kind of three different options in terms of lenders. You have your traditional bank, like who you go to deposit your money, right? Like Wells Fargo, Bank of America, Chase, things like that.
Right.
And then you have a mortgage bank, which is who I was with before. That would be someone that most consumers would know of, like Rocket Mortgage, right? They're not a depository, but they're a mortgage bank. And then a mortgage broker is that we're just independent. We have access to, I think we're approved with like 50 lenders.
Oh,
And so we have access to a whole bunch versus when you're just a mortgage bank or a retail bank,
mhm.
you usually only have like one channel with some different investors, but not nearly as many, essentially.
Okay.
So yeah, and then I like personally, yes, I'm married and I have a 1.5-year-old daughter.
Oh, talk about life changing, I'm sure.
Yes. Yes. It's been like not only her and then the whole mortgage business shifted, this whole real estate world. So it's been a fun, wild ride the last year and a half.
And what's the company name you're with?
I am with Empire Home Loans.
Empire Home Loans.
Yep.
Awesome. Well, that is great. Let's go ahead and dig right on in.
Okay.
Let's talked about a little bit the change. What's the financial market like right now? Don't shoot me.
I'm like, and this is when I'm like, oh, if I had a crystal ball, just to know where things are going to go. So right now, of course, I would say I don't say scary time. I think it's a hesitant time for a lot of consumers because, of course, I was in the market when the whole real estate crash happened. So a lot of people are looking at this market right now and like, oh my gosh, our value is about to crash. Rates have gone up. I mean, in 2.5 months, they've gone up faster than I think we dated back to almost like 1980 in terms of how quickly they moved up. So that's a shock to everybody's system. The feds, it's all over the news of the feds are raising rates to control inflation. And there's also a lot of misconceptions about that when the feds raise rates, which they're talking about their federal funds rate, which is the rate that they lend, that banks lend to each other on an overnight basis. When they go to raise that our mortgage interest rates are going to go up too. So a lot of people, that are contacting me right now are like, oh, I maybe need to get in before the feds are going to raise the rates. And usually when they do raise the rates, mortgage interest rates actually react pretty well and sometimes come down. And this last raise they did last month, I think the beginning of the week I was at like a 6.125% rate. And, today we're at about 5.625. So that's about 0.5% better. Now they are due to raise rates this week again. So again, consumers are just concerned about that and what is going to happen with, housing values. So we're seeing people really pull back, I think, to wait and see what's going to happen. But one thing I'm telling my clients is the thing that's different from our housing crash is we don't have as many homes for sale as you would probably be able to tell people. There's not as many homes on the market as there were back then. And we also have more buyers in the market than we did at the housing crash. So we don't expect for values to go down. We actually see them continuing to go up over the next year or two. So, if I had that crystal ball of when will rates come down, that's like the biggest question I get, and should I wait and whatnot. So I'm not sure. Are we addressing that probably in a little bit?
You did. I wasn't
Okay.
looking at that crystal ball, it was just about what's happening right
Yeah.
now. You pretty much summed it up, because
Perfect.
you had that crystal ball and it was gonna go 2%. I'll be out in the streets going, yes, now it's coming.
Right. I mean, we pretty much say like now is always the time. Like if you need to move, you need to move, right? So
Right, right.
and as long as you're going to hold a property for 3 to 5 years, it's always a good time to buy.
Correct. So Heather, tell us, what is the difference between a loan officer and a lender? Sometimes when we're in open house and you talking to people, they say, I need to talk with my lender, and they need to talk to the loan officer. Give us a little bit of
I know it's fine. I saw you ask me that question and I'm like, that is so funny. Like I never stopped to think about that, yet we use it so interchangeably in the marketplace. And I think what a lot of people are usually saying is like, yes, they do need to talk to their loan officer, but their loan officer works for a particular lender. So they need to find out if, that lender will allow whatever maybe an issue is that, people are trying to figure out, or if they have a particular program, because one lender may have one type of program or another lender may not. So I think that's a little bit more what people are saying, when really in truth, the loan officer is always the front person talking to the consumer, just representing the lender. So, but people, they kind of use us interchangeably.
Yep. So what are the different loan types that are out there? You usually hear a lot about FHA, conventional. What's required? What other programs that people may be able to use? What's out there now? Anything new, same? Give us some details.
So I guess I would say you have your standard products of, I call them kind of the four: conventional, FHA, VA, USDA. To make it real kind of high level simple, you're looking at minimum down payments of 3 to 3.5%. Conventional can be as little as 3% if you're a first time home buyer. FHA 3.5%, and then both VA and USDA offer 100% financing. So the kind of simple way is conventional. When you hear in the news Fannie Mae, Freddie Mac, that's conventional loans. You're looking to use those when you have if you're doing minimum down payments, you're looking at higher credit scores, meaning over about 700, 720, you're going to look to use conventional because your mortgage insurance is going to be cheaper, which mortgage insurance is required anytime you're putting down less than 20%. Mm-hmm. But a conventional loan allows you to cancel that mortgage insurance at some point down the road, whereas FHA, it's on there for the life of the loan. You can only refinance out of it or sell. A common misconception with FHA is you have to be a first-time home buyer, and you do not have to be a first-time home buyer. So I think that's something to keep in mind. I did mention USDA, but that's rural property. So that's only areas that there's a certain map on USDA's website that we can input addresses and find out if they're rural. So that's kind of the high-level overview. You're generally looking at 620 credit scores for most programs like FHA, VA, they'll go down to 580s, sometimes even lower if you have more down payment. Being in the broker space, I'll comment that there's non-traditional financing of what we call it non-QM, non-qualified mortgage, meaning you're people that maybe are self-employed and don't show a lot of income, and we can use their bank statements to get more income out of. I have some people buy investment properties that we're simply lending just on what the rent of the property is going to be versus the mortgage payment. So there's some non-traditional stuff like that out there in the broker space. And then of course there's down payment assistance loans, which I think we're going to touch on a couple of those potentially, or you had a question for me on those?
I definitely do, because we always want to know where that free money is.
Yep.
Keyword free money. Is it really free? But
Yeah.
that is one of the questions. Where would somebody get some down payment for first time home buyers?
Yeah, so that's one key thing to kind of pay attention to is most of the time you do have to be a first time home buyer to get most of the down payment assistance programs. Now, keep in mind a definition of a first time home buyer is that you haven't owned a home in 3 years. So that's a pretty generous time frame.
Right.
But there's the most popular product that gets used is CalHFA, California Housing Finance Agency. They have different down payment assistance programs that can give you, well, the traditional one that's used, I think you can get up to about 6 to 7% down payment. So that would include your down payment and closing costs. Usually you still need some money out of pocket to get into those. But right now as the market shifts, maybe we're going to be able to see seller credit to offset some of that. And when I say some, I say somewhere between $5,000 to $7,000, is what people need. Sometimes a little less, sometimes a little more, depending on the structure they go with. They have a great new program out for, it's called their Equity Builder program. It's 10% down of the price. But you do, what's that?
That's good.
Yeah, you do have to fall though within certain income limits for that program. And that program's a little bit tighter here in our counties, like Greater Sacramento, Placer, El Dorado County, than it may be in some other counties throughout California. But that is a really good new program. And that one ends up being forgiven over a 5-year period. 20% gets reduced per year. And
Let
then
me ask you a question on that part there.
Yeah.
With that being an income restricted part, that also means you probably only qualify for a certain price point.
Yeah.
Which is that in this market?
So I actually have a client right now that does qualify for this program, and don't hold me exactly to it, but I know the income limit is right around like $72,000 a year. Okay. So because she has additional funds for down payment, that puts her in her structure. It put her at about I think it was anywhere up to 375. She fit within the debt ratio. So there, based on where she's looking and whatnot, it will end up working for her once she finds the right house, but it does, restrict how much house you can qualify for.
Okay.
I will say too, there are other people ask me often about, there's the, it's called the Platinum Grant Program. There are other, and even I will say sometimes at a community level, like I know Roseville, City of Citrus Heights, sometimes have their own community funds. But when it comes to community funds, sometimes the city or, the restrictions on how you qualify don't work. Or maybe they're out of funds. When it comes to like the grant program, we tend to find that CalHFA's programs, where even on a lot of them, you're paying the money back at some point in time. They are priced rate-wise better and can get in with less payment out of pocket. So that is why we tend to end up with those a little bit more than the grant programs. But, when someone comes to us, we figure out what they can qualify for, which, if they need down payment assistance, which program is going to be best for them, and we give them the options and they can choose.
Awesome. Well, another thing, I want to backtrack to the loan types. I've heard that some of the FHAs, the PMI will drop off at some point through a refi. Is that true?
So your key statement right there was through a refi.
But still a refi of a FHA.
Well, you would have to refi out of FHA into conventional. I cannot remember what year it was. It was over 5 years ago. FHA changed their rules to where it used to be that once you had the loan for 5 years, if you hit a certain pay down of your loan parameter, essentially, then you could call and request to have the mortgage insurance canceled. And I want to say it was 5 to 7 years ago that went away. FHA put it on there for the life of the loan. Now there's speculation that they'll go back to possibly removing it. So as of right now, any FHA loan that is originated now it's on there for the life of the loan. So you can refinance into a conventional, you could refinance, into VA, or if you qualify, because VA, you have to be a veteran or have served. You could refinance into some other program, potentially not have the mortgage insurance.
Okay, just wanted to see the word on the street was right,
Yeah.
or, it needs to be revised. So
Yeah.
So here's another question for you, Heather. What programs or systems do you have for buyers who are not quite ready to buy? They don't have credit, or their credit's not that good. What kind of systems do you have for them, or do you have one?
So I work with a particular credit repair person that, especially if the credit's beyond, I've been doing it a long time. So I can often look, for example, I have a client that he just started using credit because he immigrated here. I think it was 10 years ago, but he hadn't had a social security number yet and all that. And so he just got that, I want to say it was March or April. And he hadn't, didn't have any credit under his name. So I let him know, hey, go open a secured credit card. And also we'll see if there's anyone that maybe they have a family member that can add them onto a credit card that already exists, because that will help establish their score pretty quickly.
Right.
So, I'll work with people when it's pretty easy stuff like that. Now, when we get to where maybe the credit score is, mid 500s, and there's quite a few things on the credit, that's where then I will set them up with a consultation with credit repair, where they'll give them the option of, hey, here's what you need to do on your own. And this is probably where you'll get score wise, or here's what they can do for you. But they just know better what to pay off, what to get coding changes on if needed, within the credit bureaus and things like that. So, and then after that, I have in my system, when we need to be checking back in with them to see if they've done the steps they need to do, to be following up with them and, seeing them through the process. And some people, have come back within 6 months to a year. Sometimes it's 2 years. That they've had to do credit stuff, because unfortunately fixing credit is not a quick fix usually.
Right.
But yeah, then we just calendar appropriately and keep following up and checking in with them.
Good. You kind of answered the question that I was going to ask. Do you follow up with them, or, see where they're at because they could make changes? Perfect.
Yeah.
So as a lender, how do you help the buyer win their offers? Sometimes they want to do this. How do you help them win their offer?
So for one thing that I do, which starts before their offer, is to really help the client understand their numbers. There's a lot of people that will just tell people what they're qualified for, and this is what your cash to close is, but they don't go through a breakdown of numbers. And where I see that being a problem is that maybe they might want to offer on something that they're going to back out of because they don't know their numbers, right? So when they put their offer in, we want them to win. So make sure they're fully educated. I also work with their agent to say, hey, here's where they're comfortable, pre-approval wise, here's their range. So that way, what you're working with of like, hey, if we need to go up by $2,000 or, we need to adjust this way, your negotiating power with the buyer that you're dealing with. And then on top of that, I also ask for the buyer's agent to copy me on the offer so that I can put a call and an email to that agent pretty quickly to let them know, the listing agent, to let them know how qualified that buyer is, how quickly we can close. With being a broker now, I think I was ready to close a loan the other day in 14 days that even had an appraisal, so just to help them. Really, speed has been kind of the name of the game for the last couple of years. So, helping them and working with their agent too on how much can we tighten down the contingencies to perform so that their offer can get accepted.
Awesome. That leads me into my next question, which is how important is communication between the lender, the buyer, the listing agent and buying agent, not being one of those, you put it in, do all that song and dance up front and then, whoo, where did they go? Come on, speed dial, trying to catch a person.
Right. Yeah. And I think, it's like, that's the number one thing, right? That everyone says is communication is the most important thing. And I know me personally, I can obviously only speak for how I do business, but as soon as a contract gets accepted, we're doing an introduction to the listing side, especially if I haven't talked to them already, to say who we are. And then I'm updating, like as soon as that appraisal is ordered, we call and update the agents every Tuesday. We let escrow know what's going on as well. We let the buyers know what's happening. And as we go through major, processes of, okay, loans approved, here's what we need, buyer, we let the agents know you're approved, talking with people of like, hey, are we able to close sooner? Like just keeping that line of communication open the entire time. And, problems happen. We've all been doing this long enough to know that problems come up. And the way that I handle them is I always call the agent first to let them know, hey, here's what we've got. The buyer's agent first, what's going on. Call the buyer, let them know what we need, what we believe the solution to be. And then we loop in the listing side if it's something that's going to cause us a delay. If it's something we can solve and doesn't need to wrinkle any feathers for anyone, then we're going to go ahead and get it done. But it's really about, as long as you're upfront and communicate, then it makes a big difference. And I would say that makes a difference for the buyer on who they work with too, because if a lender has a bad reputation or an agent has a bad reputation of not communicating in this business, you and I know it's a small world. And a listing side might be like, oh, I've had a really bad transaction with this person before. Like don't take their offer. So it's really important for people to choose who they work with.
That definitely is true. I remember one listing, I'm wondering why I'm not hearing from this loan officer. I already know about the problem. Call me so we work through it. And I'm chasing them down and I'm thinking, okay, the seller's okay with it because we know there's a solution.
Right.
So it's like
there's some lenders in this business that are, I wouldn't say old school, but they also I'll tell you, I'm not going to call anyone in particular out, but big banks do put some more restrictions on their loan officers of, that they can't be disclosing any, personal information and whatnot to even sometimes the buyer's agent. But you talk to your client, get the okay, which they want the house, they want the transaction to stay together. They're okay with you talking to people and you're just not going to disclose anything that you shouldn't, right? But like that, there are some lenders that believe like, no, I can't talk to the agents about anything, about any potential problem or anything about the client because it's like violating, I don't know, their rules and whatnot.
Unfortunately, the clients told you everything already.
So. Exactly.
I already know how can we improve it. So that's interesting. So here's the one important thing. What is the most important thing you would like to share with buyers?
Most important thing to share with buyers. I'm like, overall in this current market.
Well, right now, let's deal with the current market.
Okay. In this current market, I would say, is it like one thing I've been saying is, find your forever home, date the loan, you're dating your rate. Okay. People are so worried about buying because rates are up, but if you can afford the payment, rents are only going up. So if you are going to buy, you're locking in your payment. Now, when rates come down, which we anticipate that to truly happen within a year to 2 years, you're probably going to be refinancing your mortgage and you're going to be getting a lower payment than what you're at now. So, it's focus. If you need to buy and want to buy, it is a good time, because even I think I put out on Friday, the interest rates are going, or I'm sorry, not interest rates, rate of appreciation is still projected to be over 7% for the next 12 months. So values are going to keep going up. So if you can lock in your payment and not have that adjust on you, then it's still a great time to buy.
I think that works great for people who have great credit anyway, and they've shown a history of being, well, financially solid, so to
Mhm.
speak. Compared to the one who they barely got the house, they're ready to go, they got their credit where they're going. Now I think there's an added point to be made if they do go in with the higher interest rate, is to make sure you're still making yourself current, you're still
Mhm.
building your credit up. Because when it's time to refinance, if now you're happy with this house and you're out there spending and you're out there doing all
Right.
there, that can keep you locked in to where you're not able to refinance. Kind of
Yeah.
reminds me back to the boom time of 2007 and 8. They really couldn't do anything because there was really nothing there. So
Right.
people have to be mindful too, because that's why I reserved, oh, buy now, refinance later. I kind of go, whoa. I don't
Yeah.
throw
And
it out there like that is frequent.
well, and having gone through like the housing crash, I say to everyone, you're never guaranteed a refinance, right? You're never guaranteed that that could happen. Is it like, I think the life cycle of a loan is like 7 years. So, if you're okay again with the payment where it's at now, and like you said, that you may be potentially locked into this thing for, 5 years or whatever, then it's better than your rent going up. So as long as you are fine with managing your other finances. Now, yes, if I have someone that's really tight on their debt ratios, I can tell they maybe spend a lot, or do a lot on credit. Like I'm going to tell them, hey, you need to make sure that we're keeping these credit cards where they're at. We're not, taking them much higher. We're making payments on time to keep your credit score up so that when the opportunity presents itself, you are still in a good spot to do that.
Right. Well, Heather, you've answered a lot of questions and provided a lot of good value. I truly appreciate it. And people that see this will be able to kind of follow along and see what they should be doing and answer some good questions. I thank you so much.
Yeah, well,
Here.
thank you for asking me to hop on and do this. I super appreciate it.
You're welcome.
I love educating. So
it's good. Well, thank you. And once again, this is Faith Allman with Coldwell Banker Realty, Real Estate with Faith, and Heather with
Empire.
Empire. I want to say Emporium and say that's horrible. Heather, give us your contact information in which someone, if they're looking for a great lender, they'll know who to contact.
Yeah, it's Heather at empirehomeloans.com. So make sure you get the S in there, and Empire, like EMPIRE. And then my cell phone is 916-952-1686.
Awesome. Thank you.
Yeah.